Hello students, I am Narsimlu, commerce teacher working in Telangana State Model School and Junior College, Tandur, Vikarabad district. In this video, I am going to teach you CEC second year accountancy, Unit 4, Chapter 2, Partnership Accounts, Admission of a New Partner, Part 9, Problems and Solution number 1. It is the 9th video of second chapter, and the importance of this video is that in the annual examination, students, you will get this type of problem for 20 marks. Here you need to pay much attention. Carefully you watch this video and take a notebook and pen. Take down the problem and the steps. How I am going to explain, you observe and follow each and every step. So this type of problem will be given in the annual examination for 20 marks. Students, you must not neglect. Just carefully watch the video. Here one problem is given, you observe. Yes, here this is the problem. In this problem, what's happening? A new partner enters and the existing partners close the business and they start altogether new business. See the problem. Rajesh and Lucky are partners sharing profits and losses in the ratio of 2:3 respectively. The balance sheet as on 31st March 2018 was as follows. So here old partners balance sheet is given on 31st March 2008. Their balance sheet as on 31st March 2018. On the asset side, there are some assets you can go to observe. Cash rupees 10,000, debtors 50,000, stock 30,000, furniture 20,000, buildings 70,000. Total of assets 1,80,000. If you take liability side, creditors 50,000, bills payable 20,000, bank overdraft 10,000, capitals Rajesh 40,000, Lucky 60,000. Total of 1,80,000 rupees. So the balance sheet total is rupees 1,80,000. Old partners balance sheet is showing 1,80,000 rupees assets and liabilities. Now on this date means here on 1st April means 31st March nothing but 1st April. So on 1st April 2018 they decided to admit Mr. Madhu for 1/5 share in profits. The existing partners decided to take Mr. Madhu as a partner into the partnership firm for 1/5 share in profits. So at the time of he enters into the business, first point you see he has to bring rupees 40,000 towards capital and rupees 20,000 towards goodwill in cash. So whenever Madhu enters into the business, he has to bring a total of rupees 60,000 in cash, 40,000 rupees his share of capital, 20,000 rupees for goodwill. Total of rupees 60,000 he has to bring into the business. That is the first condition. Second is that here the existing assets and liabilities are revalued. So they find that furniture is to be depreciated by 2,000. Furniture value we have to decrease. means that is there will be decrease in the value of asset. So when there is the decrease or increase in the value of assets and liabilities in the problem, then you need to prepare a revaluation account. So keep this point in your mind. Next point, create a provision of rupees 3000 for bad debts and debtors. So which mean decrease in the value of asset. So whenever we create a provision for bad debts, that affects on debtors and that decreases the value of total debtors. So it is nothing but decrease in the value of assets. And come to third point here regarding assets and liabilities revaluation. Appreciate the value of buildings by rupees 1 lakh. So we need to increase the assets value by rupees 10,000, not 1 lakh, by 10,000. Okay, so two assets are decreased, one asset value is increased. That you can go to keep in your mind. So total 3 assets are affected, means either increase or decrease in their value. For that we need to prepare a revaluation account. This is the important point, you can keep in your mind. Next point you see. So and we also have to observe one important point, that what actually we are asked to do in this problem. That is very much important. See here, last point, give necessary journal entries, ledger accounts and opening balance sheet of a new firm. Here necessary journal entries, we are not asked to write many journal entries. Whatever the journal entries are required here for these adjustments, for that we can go to write entries. Next, necessary ledger accounts we need to prepare, not all ledger accounts we need to open. So which are affected, so where it is necessary to prepare ledger account, those ledger accounts only we can go to prepare. And new balance sheet we have to show. So these 3 points are important, we have to do in this problem, and this type of problem will be given in the annual examination for 20 marks. This type of problem will be given in the annual examination for 20 marks. Students, you must not neglect. Please pause the video and take down the problem, read it 2 to 3 times and understand each and every point that has been given in this problem. Now go to working notes. For the given adjustments we need to write some and we need to prepare a working notes. So here under the working notes, how we are going to show the points one by one, you see. First you can go to take old partners capitals, means existing partners capital. Who are the existing partners in this problem? Rajesh and Lucky. Rajesh 40,000, Lucky 60,000, their capitals. That was given, that has been given in their balance sheet. And next, who is the new partner enters into the business? Mr. Manu, and his profit his 1/5 share in profits. To acquire 1/5 share in profits, the Mr. Madhu enters into the business. When he enters into the business, he has to bring his share of capital rupees 40,000 and his share of goodwill rupees 20,000. Total of 60,000 rupees cash he has to bring into the business. This point, these 3 points we can go to show like this in the working notes. Next, whatever the goodwill new partner bought into the business, that should be distributed between the old partners according to their old profit sharing ratio. Old partners Rajesh and Lucky, and their old profit sharing ratio is 2:3. So here goodwill amount 20,000, that can be distributed. Rakesh 20,000 into 2/5, then we will get 8,000. Lucky 20,000 into 3/5, we will get 12,000. Like this we can go to distribute the goodwill between existing partners. Next, revaluation of assets and liabilities. So what are the assets are revalued and what are the liabilities that are revalued at the time of admission of a partner. So if the asset value increased or decreased, you can go to observe. So three assets information given: decrease in the value of asset furniture rupees 20,000, decrease in the value of asset bad debts provision rupees 3,000, which is calculated on debtors, and next appreciation in the asset. So amount of rupees 10,000. One asset amount is increased, two assets amounts are decreased. So this information we have to show in the revaluation account, and we have to find the profit of revaluation account that can be distributed between old partners according to their old profit sharing ratio. See here, very simple, 10,000, that is increased value 10,000 rupees. From that you can go to direct decreased values of assets, that is 5,000, then we will get 5,000. So here it is easy to calculate, but actually this profit should be calculated after preparation of revaluation account. Then we will find some amount, that amount should be distributed. As there are no many adjustments regarding to assets and liabilities, for that here only we calculated the profit. See, the profit should be distributed between old partners according to old profit sharing ratio. Rajesh, here instead of goodwill you have to take revaluation profit. 5,000 into 2 by 5, 2,000, and Lucky 5,000 into 3 by 5, 2,000. Here goodwill, just to strike off it and make it as a revaluation profit. Now last step on distribution of general reserve. In this problem there is no general reserve, so you need to think of this point, but generally this is the way how to make the working notes for given problem. Okay children, most probably these four heads, under these four heads only we can get adjustment points. Now after writing these adjustments, we can go to write journal entries, then we prepare ledger accounts, then we have to show the opening balance sheet of all partners. Right. Next entry. So journal entries, I think you know how to prepare the journal pro forma. In the journal pro forma you have to write the entries. So first entry, when the new partner brings his share of capital and goodwill, then the first entry, cash or bank account debit to Madhu capital account to goodwill account. In the debit column 60,000, credit column before the Madhu capital account 40,000, before goodwill account credit column 20,000, total of 60,000. Narration being goodwill and his share of capital bought by the new partner into the business. Okay, that is, or you can go to write being new partner brought his share of capital and goodwill in cash. Second entry. So whatever the goodwill that he has bought into the business, that should be distributed between old partners according to their old profit sharing ratio. For that, what is the entry you have to observe here? Goodwill account debit Rajesh capital account, Lucky capital account, 20,000, 8,000, 12,000. Narration being goodwill distributed between old partners in their old profit sharing ratio. So two entries mean we have to write at the time of admission of a partner whenever he brings cash, goodwill as well as cash into the business. Next, revaluation of assets. Revaluation account debit to furniture account 2,000 being furniture value decreased, and revaluation account debit provision for bad debts account being a provision for bad debts are created. So 3,000. See, revaluation account should be debited when the assets values are decreased. Come to next entry. Here, when assets are increased or appreciated, then the entry buildings account debit to revaluation account. Here wrongly printed, instead of profit and loss appropriation make it as revaluation account. So buildings account debit to revaluation account 10,000. Okay children. Next, here again profit and loss appropriation account printed here, make it as revaluation account, to Rajesh capital account, to Lucky's capital account. The 5,000 should be distributed between two partners according to their old profit sharing ratio, 2,000, 3,000. Next, general reserve. There is no general reserve. If there is the general reserve in the old balance sheet, means old partners balance sheet, then we can go to write the entry like this: general reserve account debit to Rajesh capital account, to Lucky capital account. So 0, and here instead of that is wrongly printed. What is that? Profit and loss appropriation account. You should not write that. You write it as revaluation account. Next, here we need to prepare revaluation account. See, in the revaluation account credit side, increased value of assets can be shown and decreased value of liabilities can be shown. There is no decrease in the liability in this problem, so only increase of asset that can be taken credit side of this account by buildings rupees 10,000. Debit side, decreased value of assets. So what are the assets are decreased? Furniture 2,000, provision for bad and doubtful debts, that is rupees 3,000. So the difference from 10,000, if you deduct this 5,000, you will get 5,000, that is the profit, revaluation profit. In the working notes I already distributed that amount. Again here it is distributed. Same, Rajesh capital account 5,000 into 2 by 5, you will get 2,000. Lucky capital account 5,000 into 3 by 5, you will get 3,000. So total of 5,000. Okay, like this we can go to prepare revaluation account. After finding this profit only, you have to write journal entry. That is important thing, but we already written. Next, here cash account. So opening balance, debit side opening balance, that is rupees in. So this opening balance we can go to take from the old balance sheet. In the old balance sheet, if you observe, there is rupees 10,000 in the cash account. So 10,000 as a opening balance. And see, new partner brings 40,000 cash and goodwill rupees 20,000. Total of rupees 70,000. That is the closing balance, also 70,000. And again, opening balance, that becomes next balance brought down rupees 70,000. Okay, student, like this we can go to prepare cash or bank account. Next, a new partner capital account. So who is new partner? Manu. How much amount he brings? 40,000 credit side, and balance brought down and carry down and brought down rupees 40,000 only, and there is no change. Next, goodwill. So in the goodwill account credit side, cash or bank account 20,000, that is distributed between old partners according to their old profit sharing ratio. Like this we can go to prepare which account? Goodwill account. So debit side, Rajesh capital account 8,000, Lucky capital account 12,000, total 20,000. So this account doesn't appear in the balance sheet. One point you can go to keep in, because if the goodwill account tallied, no need to show it show again in the balance sheet. It doesn't appear. Okay, students. Next, old partners capital accounts. So their capital account opening balance should be taken credit side as balance brought down in the balance sheet that is given in the balance sheet. Okay, students. Right. Balance brought down, Rajesh 60,000, Lucky 40,000, goodwill account 8,000, 12,000, revaluation account 2,000, 3,000, total 70,000, 55,000. Similarly here, balance carry down 70,000, 50,000, 55,000. So like this we can go to prepare old partners capital accounts. So in the old partners capital accounts we are getting three important points: credit side opening balance, then goodwill distribution amount, and revaluation account profit. So after that you can go to find the closing balance in the capital accounts. Next, balance sheet of all partners. See here, cash. The closing balance in the cash account 70,000. Debtors from 50,000 you can go to deduct 3,000, you will get 47,000. Stock 30,000, there is no decrease or increase in the value of asset. We are showing as it is rupees 30,000. Furniture 20,000 minus 2,000, that is the decrease amount we have to deduct. So 18,000 net figure can be taken out column. Building 70,000 plus 10,000 increased amount, total 80,000. So the balance sheet shows 2,45,000. Similarly, come to asset liability side. Creditors 50,000, bills payable 20,000, bank overdraft 10,000. These three liabilities are as it is, we have to show as there is no adjustment regarding these three liabilities. And come to capitals. Rajesh 70,000, Lucky 55,000, and Manu rupees 40,000. Total of 2,45,000. Like this we can go to show the balance sheet of all partners on 1st April 2019. So what you understood in this video, you understood the problem will come in the annual examination for 20 marks. That is important. Second, whenever the problem is given, that can be read 2 to 3 times, and from after reading you can go to make working notes. After making working notes, we have to write journal entries, necessary journal entries. After that, we have to prepare ledger accounts. Next, we prepare opening balance sheet. These are the steps we need to follow to solve the problem when a partner enters into the business. I hope children you understood. Thank you watching this video.